JB Knowledge Podcast Network. On episode 52 of the Insurtech Geek Podcast, talking about digital coverage for startups with Sam Hodges from Vouch. The Insurtech Geek Podcast, powered by JB Knowledge, is all about technology that's transforming and disrupting the insurance world. We'll be interviewing guests and doing deep dives into specific tech we see changing the industry. We're taking you on a journey through insurance tech, so enjoy the ride and geek out. Man, what a great week this has been. We are doing an interview today, and specifically, my good buddy Rob Galbraith is going to be doing an interview with Sam Hodges from Vouch. Before we get started with his interview with Sam, don't forget that you can subscribe to the Insurtech Geek Podcast by texting Geek Out to 66866. Make sure you never miss an episode. Here is Rob Galbraith talking to our guest, Sam Hodges.
Well, welcome everyone to another week of the Insurtech Geek Podcast. I am your co-host, but flying solo this week, Rob Galbraith. And this week, I'm pleased to have on Sam Hodges from Vouch. Sam, how are you doing?
Doing well, Rob. Thanks for having me on the show.
We're so thrilled to have you on. Really appreciate you taking the time. It's March already. It's hard to believe. We're almost to the end of Q1 now in 2021, and I still am feeling a bit disoriented. I think there's a lot of positive signs out there related to the pandemic. We've actually had a beautiful week here of weather in Texas. I think it's up to 80 degrees or so after our snowstorm for the past couple of weeks. So yeah, I'm still trying to get a read. It's been a weird year so far, and I guess following in the footsteps of 2020. But I think a lot of optimism in terms of kind of what lays ahead, including hopefully some in-person events later this year. Hopefully with the vaccine and everything, it'd be great to kind of get back and reconnected. So how's the year been for you, Sam? Off to a good start, hopefully?
Well, look, I mean, the past year has been, crazy on so many different dimensions, and not a year that I'd wish on anyone. 2020 for Vouch was actually commercially a very good year, and 2021 has been off to a really strong start. We're ahead of our board plan at this point. We're actively hiring, and a lot of the major infrastructural work we're doing just to set ourselves up for the rest of the year and kind of going into 2022 and beyond. We feel really good about how all that is progressing. To your intro, though, I mean, it is wild. It was exactly a year ago this week that, at a leadership team level, we told everyone, hey, we're going to have to go work from home for at least a period of time. And we certainly didn't anticipate that being a full year, but here we are. But hopefully getting toward the tail end of all of this.
Yeah, it is crazy, and that's great to hear. And I think it's amazing actually with the technology and infrastructure that we have had in place in 2020. Can you imagine if we'd had this 20 or 30 years ago, what business would have been like? I think it would have been a much different climate. So I know I'm reaching the 1-year anniversary of when I was last on an airplane, which is very strange. So I was in Sacramento for an agricultural insurance conference talking about Insurtech, and had no idea that was going to be my last trip. I remember being very relieved when my first trips, I was supposed to go to like Milwaukee and Philadelphia, a couple places that I wasn't super jazzed to go to. So I was kind of secretly glad that some of my travel was canceled. But now it's been a long enough time. I'm definitely jonesing to get back out there, but obviously in a safe space. So we'll definitely talk about Vouch and kind of what your value proposition is and dig deeper into that, Sam. But first, we want to start, as we always do in the Insurtech Geek Podcast, with your background. And typically what we find is that people don't start out in the insurance world, and they kind of come to our world through various means and various paths. So your background, you're at Brown University, got your undergrad degree there, and then you have a master's and an MBA from Stanford. So maybe you can just kind of, I guess, start from there. What did you think you were going to be getting into as you were pursuing your formal education? Where have you been? You've done a lot in your career, both on the private side as well as governmental service. And how did you end up co-founding Vouch?
Sure thing. So I'll give you kind of the backstory, which is I grew up on the West Coast in a reasonably academic family. And through, at least mid-college, I thought I was going to pursue a pretty academic path. I thought I'd go be, a researcher, PhD of some sort. And honestly, it wasn't until, pretty late in college that I realized there are just so many incredible things you can do in the private sector. And that was, I had a series of internships that really kind of opened my eyes to it. And my path into insurance has been kind of an interesting one. And what I'd say is my first exposure was actually pretty early on in my career. I was working as a strategy consultant, and we were serving lots of different, mostly very large and mature companies. And lo and behold, one of my first major clients and projects was with Allstate. And so I actually spent the better part of a year on a series of engagements around new product development, new product rollout, working with the Allstate, field agency force, the captive agencies primarily, but also a lot of folks in corporate back in Northbrook. And that was my first, view into the insurance space. Fast forward a little bit, and a couple of roles deeper in my career, I was working as an investor. And in part because of that early exposure in the insurance space, I kind of was slotted in as the Fintech and Insurtech guy. And I was very, very lucky to get under the wing of a guy named Larry Wilson, who is one of the grandfathers of the insurance technology space. Larry founded a company back, I think it was in 1974, if memory serves, called the Policy Management Systems Corporation, PMSA, eventually changed the name to Mind Corporation. And I worked with Larry for a year and a half or so, and we were very active in investing in, kind of the first wave of modern insurance technology. This is back in kind of the mid 2000s. And so, for example, one of the companies that Larry was very involved with that I got involved with as well was Duck Creek Technologies, which actually just went public about 9 months ago. So got a little bit of kind of large carrier experience. And then as an investor, spent a lot of time thinking about technology and systems for carriers. And then actually kind of went down about an almost decade-long divergence building a couple of companies, first in the capital markets technology space, and then another one in the commercial lending space. And I'd been just tracking out of the corner of my eye what was happening in the insurance landscape. And I was just blown away because, back when I was first working in the space, Insurtech really meant systems and software and services for large carriers. But beginning about, 7 or 8 years ago, increasingly a lot of folks were building digitally native new insurance companies. And it was just really compelling to see that coming together. And so when I exited out of my last business, it was, again, in the commercial lending space. We took it public in 2018. I took some time off and decided what I wanted to do next. Ultimately got really excited to team up with my co-founder as well as our early backers and partners to start Vouch. And there are really two core theses that went into the formation of Vouch. The first is this belief that you can use technology and more advanced techniques on the analytics side to build a truly modern commercial insurance, not just distribution experience, but really kind of a full life cycle experience around commercial P&C. And then secondly, that there's an opportunity to drive real product innovation specifically focused on serving the needs of other early stage, high growth companies. And so 2.5 years ago, we kind of came together and got excited about building a business with those two kind of themes at their core. And that's kind of what brought us to where we are today.
It's an amazing story, and I know it has a lot of twists and turns. But thank you for sharing that, Sam. Just quickly before we really do a deep dive on Vouch, you kind of mentioned fintech versus insurtech, and being in the fintech space and kind of seeing what was happening with insurtech. So, I have not been, career insurance professional over 20 years in the industry, so I have very limited exposure to fintech. Generally, what I hear is that fintech tends to be about 24 to 48 months ahead of insurtech. But I'm just kind of curious your thoughts about the difference, any similarities or differences between the two, and just any broad commentary that you might have, knowing that our audience is primarily insurtech and they may have heard of fintech, but not have had as much exposure to that. So I'm sure they'd be interested in your thoughts.
Well, I love both domains, and I view them as being reasonably close cousins. There are many, many similarities. There's some really important differences as well. But the similarities are, number one, they tend to be dominated by very large incumbent players, many of which were built through M&A, meaning they were built inorganically over a lot of period of time. And there are some, kind of side effects from that. Second, regulatory compliance is a major factor that you need to think about. Third, you need to think a lot about underwriting and risk management and capital management in the actual design of the business model that you are doing. And fourthly, they tend to actually be pretty fragmented, particularly on the B2B side, in terms of all of the different niches where there are specialty players doing some really interesting things. I would also say that my experience across Insurtech and Fintech is, particularly over the last decade or so, there are a couple of mega trends which are really accelerating the pace of change that is going on in the industry. One of those is obviously the expectation amongst all forms of customers, be they consumers or businesses, for digitally native service offerings, right? And I think both in banking services and in the insurance space, both large incumbents as well as new disruptors are very mindful of that expectation. So that's one. Secondly, they're the emergence of more novel business models that are enabled based on the internet and based on the availability of more structured data, right? The fact that you can pull in a huge amount of information around a customer, be it someone you might want to offer credit to or someone you might want to offer an insurance policy to, and really have a very granular, data-driven view of them at the time of initial underwriting, that wouldn't have been possible, 20 or 30 years ago. Maybe you could rely on some bureau data, but there really weren't all that many other structured data sources. That has changed materially, since then. And then thirdly, honestly, there's just a new set of participants in the market due to, frankly, the way markets have globalized and what that implies in terms of global competition. There are expectations around embedded service offerings in certain segments. And frankly, just the pace of change has accelerated. And I think that's true across many different industries, but particularly so in both financial services and insurance. So those are the big similarities. Now, differences, obviously, the specific regulators are very different. The way you think about the tail on risk, that is very different. The fact that, the direction of money flows in credit granting and insurance, that's a big difference, right? In credit, it's all about getting the money back. In insurance, it's about, them giving you the money and then you calibrating, what claims you're expected to pay. But, and not to in any way dismiss those differences, they're important, nuanced differences. But I would start by saying, again, there are a lot of similarities too.
Yeah, no, I really appreciate you breaking that down for us, Sam. Very, very thoughtful. And yeah, the money flow piece is very interesting. I spent the bulk of my career at USA, which of course is known as a major insurance player, but also has a fairly large banking operation. And I remember talking with executives on the other side, and absolutely the flow of money for when we had executives that would kind of have roles in both sides of the company. That was something that they all commented on. So, Sam, before we get into Vouch, I want to have you talk a little bit about your customers and specifically the startups. Why do startups need a dedicated provider? What makes them special or unique as a customer base that, I guess a traditional agent or broker may not serve as well?
Definitely. So let me start by just being really clear on the target market we're serving today, which are small, early stage, technology driven companies that have the potential to grow very quickly. And so the way we think about this is either startups that are venture backed or they could be venture backed, whether they are venture backed or not in the technology sector. Now, the reason why I think this is a particularly interesting segment, it really goes back to the Mark Andreessen quip of software is eating the world, right? And I think, again, we're talking about it in the context of banking and insurance services. Software is changing the way virtually every sector works. And startups are a major component of that. They also have very different risk attributes and very different exposures in them. And that implies that they both need different coverage that is also underwritten and rated differently than if you were rating a more traditional, in the real world business. So let me give you some very specific examples. For a software business, for example, their E&O exposure is going to follow the type of client they serve, not dissimilar from an offline services business. But things like the way their EPL exposure might work or their GL exposure might work are going to have much more to do with the way their workforce is set up and deployed. Are they in office? Are they fully distributed? How much of it is computer work versus work kind of moving around in the real world? And unless you again have a really granular view on those differences and actually have the data sources necessary to rate them, in a lot of cases, both the coverage you might recommend, but also honestly, the way it's underwritten and rated will be off. And we see this every single day at Vouch. So picking up on that, the first thing we did in building Vouch was we built out an incredibly detailed risk taxonomy where we actually took tech, this kind of big amorphous thing, and broke it down into a bunch of very specific sub niches. And those niches are really defined based on who is the customer, what is the revenue model, where are the employees, what type of employees do they have, and what are the idiosyncratic exposures that might be unique given all of those different factors. And as a result of that, we, when a client comes to us, can immediately distinguish between some of the specific risks, let's say inherent to, on the one hand, a digital gaming company versus a digital health company on the other hand. And that, again, it's under the underlying capability is really a risk taxonomy and a data-driven one. But the way it manifests is a much more streamlined and personalized user journey for the insured relative to what they can get through other channels. And so pulling this back to why would a startup work with Vouch as opposed to others? Number one, it's a lot faster, right? You can actually apply and actually get coverage under 10 minutes. Number two, the coverage that's recommended and the way the actual form that we built is designed, it's tailored with specific coverage features designed for this end market. So that's the second major factor. And then thirdly, it's also rated and underwritten in a way that is specific to these types of businesses. And so in a lot of cases, people are actually able to save money as well because their exposure profile is different versus one of their analogs that might operate again in a more traditional manner. So that's what goes into it from a client experience perspective.
And so just in terms of the actual product, right, the forms and coverages, is that something that you've come up with? You've got Reinsurance Backers. I think Munich Re is one that's mentioned, and others. Maybe you can just kind of give people a little bit of the inner workings behind the scenes that a customer might not see, but insurance pros would want to know details on.
Definitely. So Vouch is currently set up as a commercial lines MGA. We have a carrier partner, which is State National, not too far away from Rob, from where you're based, as their HQ. And then on the capacity side, Munich Re is our anchor reinsurance partner. And we really like that setup because we've worked very closely with those partners, again, to design a digital experience, a form, set of approved filings, and also an underwriting and rating framework which is very well tailored to meet the needs of this in market.
Sam, you talked about not just tech startups, but a specific kind, right? Early stage that have the ability to grow and scale. Maybe you can talk about uniqueness, I guess, among that group versus a more broad view of all startups, right? And maybe what are some unique things of those that are companies that, again, 5 years from now might be household names to folks, but we haven't heard of today?
Yeah, for sure. So a couple characteristics, one of which is, again, they have a very strong preference for digitally native service offerings. So the notion of filling out PDFs and sending them by email, let alone via fax, I mean, that's just completely abhorrent to a startup founder who's used to having every other service they consume delivered as SaaS. So that's a first major factor. Secondly, they have the characteristic of growing quickly or going out of business. Right, that's kind of inherent in the startup model. You either are going to find something that has some real growth to it and take off and attract more resources and keep going, or you're going to stumble. You're not going to find product market fit, and you're going to go away. So thinking about, for example, how do what are the the estimates you use around some of the different factors on which you're rating that business, given that pace of change, that's really tricky and something you have to be really thoughtful about. Otherwise, it'd be really easy to overprice or underprice relative to the exposures that actually are tracking that growth. So that's a second major one. Related to that, there's also a big pressure on servicing expectations, because the behavior we see all the time is an insured will come to us, or a client, I should say, a prospective client will come to us. We will write their initial policy or set of coverages, and then 3 months later they'll come back and they'll need to raise limit and they'll need to tack on another line. And frankly, the profile of the business may have changed dramatically. So how do you deliver a great experience, not just the first time, but several months later when you need to do something that's a bit more comprehensive and robust? That also is an aspect of this business that I think is pretty unique, in which, again, we've designed Vouch to accommodate.
Very fascinating. So if you were to compare and contrast, I guess, the service experience from Vouch clients with a traditional agent or broker, certainly that digital native part that you mentioned, but what are some other distinguishing features or characteristics? And I'm in particular curious about, are people mostly interacting with you via tech for servicing needs, or, is there a call center or face-to-face, or when do, oftentimes, like, it's really about humans need to be involved at certain points, but making sure they're involved in the things that humans do well, right? And
Yep.
machines do things they do well. So yeah, just kind of curious what that looks like.
I'm a big believer in that hybridization as well, right? It's really about designing a business process so you use technology to do the things that should be automated and routinized, and versus where do you actually want to have people involved, either because it improves the client experience or because that incremental judgmental discretion actually adds a lot of signal in how you actually manage this to a situation. So we definitely have taken that mentality designing the way Vouch works. So let me separate it in terms of initially applying versus client service post-bind. So on the initial application, you can, and in a lot of cases we see startups come, apply for coverage, and in effect bind without talking to a human at all. And from our perspective, in many cases, that's great because it's a fast, seamless experience where we've provided a dynamic recommendation around what coverage we think is appropriate, right? And we have a licensed agency, set up to do exactly that, and a set of technology-driven rules that allow for that recommendation to be delivered. Now, in other cases, either because the client wants it or because there's enough complexity in the business where we think it is more appropriate, we will actually have someone talk to one of our experienced insurance advisors. And so that is also something that's distinguished. We don't have folks on our team, within our agency who serve all types of businesses, right? We have folks who specifically are educated and trained up on the way this in market works, so they can give really good advice to clients, both existing and prospective ones, around the way risk works in their business, and therefore also what they should do from a coverage perspective. So that is a second piece. Once someone is a Vouch client, then we have the ability for them to come in and request, obviously, changes in coverage. It could be an increase in limit. It could be tacking on an additional insurance product. And again, depending on what that request is, it'll either be human supported or digitally native as far as the experience goes. And then the last point I'd make is from an underwriting perspective, obviously for businesses that have very specific coverage requirements or unique risks, we also have folks on our team who are really experienced commercial P&C underwriters who will do that case level review and make sure we're getting it right, both in terms of what coverage is offered, but also whether we want to actually take on that risk.
Yeah, fascinating. And it's really an art, some of these customer journeys and like you said, customizing recommendations. And I always feel like it's a win when people don't have to talk to somebody to acquire coverage that meets their needs. But, I see people where either to your point, makes sense for the human to come in because this would get very, complicated and potentially wrapped around the axle, right? And you want to intervene, or just for that, I'm doing the right thing. I'm buying what I think I'm buying. Yep. Insurance tends to be a product we don't buy very often relative to, whatever it is out there. Think about your, consumer product.
And the reality is most of us, I'm sorry, I didn't mean to cut you off, but most of us don't actually use it very often either. Right. And so it's not just about creating a great experience around getting the insurance. It's also making sure that should someone need to use their insurance, they actually understand what's covered and they have a realistic expectation around how that event is going to go down as well.
Yeah, absolutely. No, you're spot on. It's spending something that costs a lot of money, right? And relative, particularly for a startup, right? Any cost you're going to be sensitive to. I hope I don't use, right? And if I do have to use it, I darn well want to make sure that I am covered for the things that I want. The worst case would be buying the insurance, paying the premium, that I have some loss event, only to find out that I'm not properly covered, and I don't have the coverage that I think I have, or I consider on my exposures. Yep. Yeah. Sam, maybe you can talk a little bit about, on your website, you mentioned some top startup funders such as Ribbit Capital, Silicon Valley Bank, Y Combinator, Index Ventures. Are these like affiliate partners with you? And what does kind of your acquisition strategy look like to let startups know that are the right target for you, that Vouch is out there and what you guys do?
We are really lucky to have a great group of investors who've backed Vouch, in our early days. And so the folks you mentioned, Ribbit, Silicon Valley Bank, Y Combinator, and also Index, are all major equity investors in Vouch. And we're really excited to have all of them, as well as a number of others, involved in our cap table and helping, fuel our growth. They're all folks who have deep experience in this domain, and where they have a lot of enthusiasm around, what we're trying to do. From a distribution perspective, in addition to providing capital backing, there also are a couple of those folks who have been very powerful as distribution partners. We took our company, Vouch itself, through the Y Combinator batch in summer of 2019. That was a great experience for us because it allowed us to really hone our product and really make sure we are understanding the psychology and user behavior of the types of startups we were trying to serve. I mean, YC was great for many reasons, but that from a commercial perspective was particularly useful in really honing in what we were trying to do. We serve many, many YC startups, right? We see a lot of startups from each batch, as well as folks who graduated from batches coming to Vouch once they reach milestones in their business where they need insurance coverage. And so that's been terrific. It's been really helpful in building the type of brand we want to build. Silicon Valley Bank has been an anchor partner for Vouch since the very get-go. We are the preferred commercial insurance partner for Silicon Valley Bank for its client base across the United States. For folks who are not familiar with SVB, SVB is the leading commercial bank focused on the venture-backed ecosystem. It's a space they've been covering from a banking services perspective for 40 years or so. And we work very closely with them to ensure that their clients, to the extent those clients have insurance needs, they are, again, given the right offer, given the right coverage when the time comes. And we work all across the organization in terms of doing that in the right way. So those are a couple of examples of the way that we work with partners to get in front of clients. I'd say at a high level, we've set up Vouch primarily to kind of go direct, if you will. We obviously have a carrier partner who's technically the writer, where it's very much a direct model. And then we use these strategic partners to make sure, again, we are getting introduced to those prospective clients at the right time.
Yeah, I think that's just amazingly powerful. Just to have them from developing your own business perspective, but then also be a potential pipeline and source of prospects. So it's great that it kind of works on multiple levels. So, kind of getting to the end here, Sam, you mentioned kind of, the full suite of products that you do and the customization that you've done. I'm curious to know if there are, new products or exposures that you don't think are being adequately served today that, maybe new products you're thinking about for the future, and then just, open up to, I guess, opine on the future of Insurtech in general. We've got a news item coming up that research article said, expect Insurtech premiums to double by 2025. Actually, that doesn't seem aggressive enough to me. I was surprised, like, oh, duh, right? This really just kind of started, like you said, 5-10 years ago, right? So, but yeah, just kind of your thoughts on, Insurtech going forward.
Sure. So we see tremendous opportunities to innovate both on the insurance product side and on the experiential side. Now, I say that knowing there obviously are lots of nuances around how each of these submarkets works, and also, real sense that we need to take real care in how we think about underwriting and rating so we don't get out over our skis. So do we have big aspirations in terms of the type of product innovation we can drive at Vouch? Absolutely. We'll actually have a couple of announcements here a bit later in the year about new products we're getting out into market, which we're really excited about, which we think will sing to some of the needs and the goals that we've heard from clients we see out in the market. But we want to make sure that pace of product innovation is done at a rate that's appropriate, given our understanding and kind of the data we have to underwrite and rate properly. In terms of big predictions for how the space is going to play forward, my belief is any insurance business that doesn't think about how a direct relationship with a consumer matters, both in terms of the ease of getting the insurance, but also the lifecycle management of the experience, they're probably going to miss a step. And I'd also offer that relationship, even those who are going through brokers, right? And I want to be really clear, our message at Vouch is not an anti-broker one. We know a lot of folks in the broker community we have a tremendous amount of respect for. And I think for lots of segments, going through a broker to get coverage is the right approach. For the early stage startups we're serving today, we believe that a direct approach is the right approach. But even for those carriers that are going through brokers, making sure that they can work with a broker to ensure that the overall lifecycle management of that account is done thoughtfully, and that you can do things like actually influence risk outcomes. I think that's going to be really important. And people have been talking about this in insurance for decades. But it's only, I think, with the advent of digital technologies that allow you to do it in a scalable way, with real data that allow you to have insights on what's going on at that account level, you can actually do it realistically for a wider share of clients than the ones for whom that is happening right now. So that kind of integrated approach around how you work with a client or through a broker and the client, use data to manage the life cycle of the account, I think that is a major shift that's going on, in addition to all of the digitally native product and service offerings that are going on. To your point around capacity and kind of the way rate will play out, I mean, my view on that is it's going to depend, obviously, based on the underlying subsector. what happens in homeowners is going to be on some level a little bit different than what happens in small commercial for all the obvious reasons. And also there are going to be differences, organization to organization, right? Our belief at Vouch is we want to do right by our partners, including those partners who've worked with us since the get-go. And that means we want to take a sustainable view as to underwriting and the volatility of our underwriting results. Different new players will think about that dimension differently, put it that way.
Yeah, no, I think that's a great synopsis. And actually, we've got an article here I'm going to mention that talks a little bit about loss ratio and financials at Root as one of the news items that we have this week. So fantastic thoughts. Great to have you on, Sam, and really excited about what you're doing at Vouch and wish you the best of luck. So with that, let me transition quickly to news items. James had provided a couple of news items this week that I wanted to share with our audience. The first I mentioned previously, Juniper Research came out this week and said that the total value of insurance premiums generated by Insurtech platforms will have more than doubled within 5 years worldwide, and they expect it to go from an estimated $250 billion today to $556 billion by 2025. So those are some big numbers. So, TBD on that. But it's funny, you start seeing those numbers and you really, it gets to be eye-popping, $1 billion here, $1 billion there. You start talking about real money, right? No, we're talking about insurance is an over $5 trillion global market. So, keep that in mind. But I think it really speaks to the success of Insurtech. I don't have any reason to doubt that will actually come to fruition in 2025. And then the other news item that James shared is that Root has rode the wave of increasing demand for usage-based insurance amid the pandemic, and they announced that they had $346 million in revenue last year, up from $290 million the year prior. That helped it to improve its direct loss ratio to 82% from 99.9% in 2019 in a letter that they sent to shareholders. So to your point, Sam, just kind of about that sustainability. And I know that's been from someone that monitors both the enthusiast, of which I consider myself one, and the critics of Insurtech. It's all about the bottom line. It's all about the loss ratio. What about the loss ratio? That's probably the number one critique that I've heard, and I've always felt that will come over time. In again, very organization by organization, but with data, with experience, you have that ability to adjust your underwriting, to adjust your rating, as you mentioned, Sam. So I would guess that just as you're doing at Vouch, that you kind of see that many other Insurtechs in this space are going through a similar process. But any additional thoughts that you have on just getting that balance right between, certainly providing, the product and the service and the experience side, but then, having that bottom line that you've got to manage to as well, and how do you hit that right balance?
Yeah, I mean, it's a great question. I guess my biggest thought here is I think too many people have been focused on very short-term results and not nearly focused enough on the integral of results over time. And so, the case study you just mentioned around the improvement for Root, I think is a great example of that. If you were to take a 5-year view of the way those results would play out, what is the implication, right? How do you kind of think about that on an overall portfolio basis with respect to dollars in and dollars out? And I don't want to make it about Root specifically, but I think just in general, these are businesses that take time to build, at least to build in the right way. And is it okay sometimes to subsidize some losses up front in order to get data and kind of more rigorous underwriting so that several years in, you can do things more thoughtfully? I think conceptually, that's a totally appropriate thing. And that's honestly where, equity risk capital comes in. And hence, I think the appetite of a lot of venture capitalists in this space. And so I guess that'd be my gentle pushback to those folks who've been consistently critical of Insurtechs. It's one thing if we were to say, we're going to lose money forever, but it's another thing to say, we are going to have to figure out things over the first few years so that we can tighten them up over time. And it's just a very different mentality. For Vouch, we actually think we've got the opportunity to do a lot of that sooner rather than later.
That's fantastic. And I really appreciate you sharing that mindset. And yeah, I think that's, sometimes we talk about, right, the federal budget deficit, right? And why isn't the federal government run the way that, our households might run in terms of, how much credit card debt and mortgage and whatnot. And, it's good, I guess, to have that as a mindset, as a parable or some, kind of an anecdote that you can kind of grasp onto, an analogy, right? But sometimes these analogies break down and it's not the same, right, as running your own. And so, yeah, I think it's maybe not there's a lot of considerations go to it. I guess I'll put it that way, right? And so the timing in the short term versus medium and long term, the different time horizons involved are going to vary by company, based on the founders, based on the investors, a whole host of different factors. So something for everyone out there to keep in mind. Now, certainly, if I think over time, if you see performance that's not improving or that's getting worse over time or whatnot, you can draw conclusions. I'm not saying that every Insurtech is managed perfectly from a growth and profitability perspective, but it's something that you have to always take these numbers, particularly early on, with a grain of salt. The last item I wanted to mention in our news roundup this week is the insurance startup Hippo is going to go public in a $5 billion SPAC merger. And I've got several friends at Hippo, so congratulations to them. This article, it's all over the news, but the one I'm quoting is from the Wall Street Journal. Hippo is going to go public through a merger with Reinvent Technology Partners Z, which has co-directors Reid Hoffman, who's the LinkedIn co-founder, and Mark Pincus, who's the founder of Zynga, the mobile game developer. So a couple of really big names in Silicon Valley, not just in the insurance space. And it's kind of fun, I think, when some of the Valley legends are ones that are getting involved in the insurance side. The article says that Hippo's move will provide funding as it continues the transition from being a partner to insurance carriers that provides a digital sales channel for them to being both a partner and a direct competitor. And it goes on to note that they had acquired their carrier Spinnaker last year. So congratulations to the folks at Hippo. Any thoughts on this news this week? I assume this came across your radar, Sam.
Rob, I think you said it well. Really exciting to see, big names like the folks involved with that SPAC getting involved with Hippo. We also know the folks at Hippo really well, and we're really excited for them, right? I mean, I think it's another bellwether event for the space and just speaks to the equity capital markets enthusiasm for these big digitally native players and their ability to, deliver meaningfully better customer experiences in the segments they're playing. So definitely one we're watching carefully and one we're rooting for.
Fantastic. Well, with that, we're going to wrap up. I want to thank my guest, Sam Hodges from Vouch. Sam, how can people get in touch with you and learn more about Vouch?
Our website is vouch.us, and people can always email me at sam.hodges@vouch.us. Really appreciate being on the show and love to hear from folks.
And this has been the Insurtech Geek Podcast powered by JB Knowledge, jbknowledge.com. It's all about technology that's transforming and disrupting the insurance world. I've been your host, James Benham, jamesbenham.com, with my co-host, Rob Galbraith, endofInsurance.com. Big thanks to Jim Greenlee, our podcast producer, Kara Daltonar, our creative producer, and thank you for joining us today. We're taking you on a journey through insurance tech, so enjoy the ride and geek out. See you next time.